G'day, money miners. Another week. Bloody good weekend had by all, I reckon. I had a bloody ripper. You know, you probably didn't have much of a weekend off. MMS, because they moved dirt on the weekends as well.
That team doesn't stop.
That's how they frigging get people like Black Cat into early production, because they're moving dirt on weekends. So you give them a buzz if you want some dirt moved on weekends. I'll just get pumped up talking about MMT. I'll just start shadow boxing.
They move it at night time as well. It's like
Nights, weekends.
You have your weekend.
While you're
they'll do the
piss
work.
on a Saturday night, they're moving dirt. It's like,
all right.
MMS.
What have we got today, Matty?
Mate, obviously, since Ali GC's in the house, well, there's obviously a lot of gold to be discussed.
Bit of a correlation.
Yeah, so we've got Westgold, we've got some pre-quarterlies and quarters. We've got Westgold, we've got Pantoro, we've got Alkane. Years of keeping the aluminium dream alive, and tell you, holy snap and duck shit, there's a big one coming out at the end of the week with the OG of aluminium. But
stay tuned.
Mate, it's all go.
Matty, I think LEGC must stand for Gold Correspondent.
Gold.
Yeah, that is definitely
it might actually do.
That is definitely what the C
Ali,
stands
the gold
for.
correspondent. Why don't we start with...
Absolutely.
Should we start with Westgold, guys?
Shout out Stella GC. Right, Westgold. So I guess first quarter post merger looks like probably a bit of a reset one, set up for future growth. I think it was always going to be that quarter.
So pre-quarterly, not a full...
Yeah,
quarterly,
right. But it's like, look, it says like they produced 77,000 ounces, but it doesn't include the July from the Karora numbers. So like if they included that, it would have been 91,000 ounces, but their guidance is 400 to 420 for the year. So a bit behind, but it's heavily back-end weighted with Great Fingal coming online, expansion at Bluebird South Junction, the Karora assets like Beta Hunt really hitting the mark. So, yeah, it's a bit to go there. But they'll probably need some like 120,000 ounce month sort of quarter in the back end to sort of make up for this one. But they have reiterated their guidance, so obviously confident they're going to achieve it. But the money's the interesting one. Reported cash and bullion and liquid investments of $103. So come in significantly lower than some of the streets forecasts. So I think Canaccord had them at 174. Argonaut had them at 136. So there's obviously, we'll go through it. So whether there's some, working capital outflows from the payables or there's some transaction costs, we're inferring a lot because it's just a pre-quarterly and haven't got the full detail on it yet.
Still a big delta.
Yeah, So it might be, when we're talking about the payables and everything, like this might have just been the quarter reset they needed, and this is probably the most logical time to do it. Whether that's happened or not. So we'll just assume everything.
What did you find out from your digging then, mate?
Oh, mate, me and GC, we double teaming this shit today. That was good.
We did. Good team effort today.
Yeah, good times. GC, you take it away. You're the money guru
money
around
person.
Here.
So they actually at Diggers they sort of reported like an adjusted cash and cash equivalents number, sort of post the 30 June quarterly of $165 million. So
that was their sort of their June quarter number
with some adjustments
with all the merger stuff taken into account. Yeah.
So the June number was $263 million. So then that's been adjusted by taking off the cash component for the consideration for Karora. That was $125 million. Then they sort of add back the net cash they sort of have acquired through that Karora merger of $38 million, and then take off $11 million cash consideration that's gone into this spinco for Karora shareholders called Coolico, which leaves that 165. So what sort of happened? What else has sort of happened in this quarter? So the Westgold Karora deal obviously completed on the 1st of August. That's why they only had sort of 2 months worth of Karora production in this sort of pre-quarterly. There's transaction fees for these deals, obviously. The original deal presentation when the deal was announced said there'd be around $39 million in other transaction costs and also $64 million in landholder duty. They also have an investment in Orogold, which ding, I'm a shareholder, and that was a $6 million investment done at 0.45 cents. And that's almost doubled now, so worth almost $10.5 million today. They also declared a divvy a few months ago, but just having a look at the announcements, the payment of that was actually post-quarter end, like literally last week. So I don't think included. No. Yeah. So I guess the question we were sort of chatting amongst ourselves today, Maddie, is what could have been like those driving factors that have made the cash balance go down, a fair bit from 165 million, as reported at Diggers with a few of those sort of merger adjustments, to $103 million today at the 30 September quarterly.
And like, remember they're unhedged. They sold it, I think it was 37.23 or something for an average gold price. Like, so it's, and like, because we did talk about the trade creditors, like, especially on the combined any, I think so, because in the circular for pre-merger for Karora, I think, what were they? They were 54 million net payables
for
the Karora side. And then I think Westgold were...
Yeah, their net creditors were about $140 odd million at 30 June.
Yeah, because you had the update from the annual report. So
yeah, exactly.
It's like whether was there some outflows, possibly paying some of that creditor balance down. Then there's obviously the transaction costs with the merger. We don't know yet if they're like spread out, if they had to be, if there's some being paid this quarter or anything like that. The landholder duty, which is like the stamp duty, I'm pretty sure that would not have been paid. I think, like, I've heard someone said it's like could be 12 months after. Like, I've heard that I think Northern Star haven't even paid the super pit one yet. So I think that can get delayed. So I would imagine that 64 million isn't part of it.
Well, it's probably spread out or something like that as well.
I mean, you're going to talk about Pantoro next up, Ali, and they've got a stamp duty payment for the merger with Tulla, which they're going to pay the quarter we're currently in. But that was a deal that happened in January last year.
That's right. So these things take a bit of time to sort of wash their way through, right?
And I think there's like they had the executive payout for Karora, but then there's probably some payments to old Westgold employees, because I think the post-merger there was like some redundancies and stuff like that. So whether some of that is all added up. So
the gist is there's a bunch of cash that you can't quite figure out where it's gone yet.
There's some leakage somewhere, but we don't know what it
cash,
is. Yeah, and I think probably from the sounds of sort of disappointed on ounces a little bit as well, probably across everything. So, but as I said, it's like there's a lot going on to really that second half of this financial year is going to be sort of when this vehicle sort of comes together by the sounds, with like those three sort of improvements coming on, especially like Great Fingal, like adding the ounces from there.
Yeah, and the other thing as well, which they did flag a little relatively recently, is FY25 is anticipated to be the peak investment year. So this is when they put their FY25 guidance out. So they've flagged 235 million of growth capex and exploration guidance of $50 million. And we'll flash up the table here, which shows that sort of compared against FY24 guidance and actual. So it's a fair step up from previous years as well. So I think it definitely feels, like you said, Maddie, a bit of a sort of a pinch point reset quarter for Westgold. There's a lot going on between capex, exploration, merger sort of cost stuff, working capital. There's a lot of sort of factors at play, and we probably won't be able to see the sort of more granular detail until the full quarterly report comes out at the back end of this month. But
because I think with getting Beta Hunt was like, it was producing, but like the growth story there is getting out to Fletcher to bring on those things. So there's obviously, the capital to go in that and the time. So they've sort of pivoted from that, that cash building company to, a bit of a growth story, maybe for this financial year.
It's kind of conspicuous because you always got that building chart, the building cash each pre-quarterly for the last 6 of them, I think, from memory.
Yes, I love showing that. Yeah.
It's sort of, in its absence kind of stands out.
Yeah, mate, you got to have a growth story, boys
You do.
and girl.
Well, I think that's the thing too. Is like, I'm pretty sure that like Karora were pitching themselves as a growth company that was going to go all the way to like 200 whatever thousand ounces themselves, and then like Westgold were a growth story, and now you put the two together and there's no growth. Like, in fact, the pro forma ounces are down. You know what I mean? Like,
yeah, but I believe there is growth end of next year.
yeah,
I believe that's what
Probably
they're
a bit
heading
of
to.
a process.
And another thing for the leakage, I don't think, to my knowledge, the numbers from Q4, the end of last financial year for the Karora assets, weren't disclosed. There was possibly a real shit quarter there. So the money that come in, that 30 odd mil net cash acquired from Karora, that mightn't have been as much because I don't think the quarterly was that good at Beta Hunt, which would have been they got less cash in from that. So that's probably thrown out a bit of the assumptions of what this pro forma cash would be at this point. So yet to know that.
it's a disappointing. Like, the numbers that have come out so far are disappointing. Almost feels like the market had kind of was expecting it as well, because like Westgold's really underperformed its peer Goldies over the last like month. It's been like downwards, and then I think like just take Northern Star for example. I think last month they're up like 9-10% versus Westgold down like I think it's 11 or 12, 15.
Yeah, they had a good run post index inclusion and all that. Like it seemed, but like it was, as I said, it had a run in the lead up to this. So they're back the other way. So yeah,
We'll give it a bit more time to see it all beds out.
Yeah, just nothing like a merger reset. It's like a clean slate. Bloody, I think Great Fingal's going to be that's a pretty exciting one for them. I think, especially if they get like just because of the historic production there and the grade, and if they get a bit of an uplift in the grade, and if it keeps going, it's got potential to be a pretty good operation. I think definitely needs its own hybrid power station.
Yes.
By CrossBoundary Energy. I think that's a given. Like,
obvious.
If there's longevity in it, if they do it if they do right now and just say, look, we're betting Great Fingal's going to go for ages, we should call Tim Taylor, get him up to bloody get a hybrid power station going, and just like, mate, give yourself the best chance to have a long life mine.
Should have called him yesterday, huh?
Oh, they probably already have, but like not telling everyone how to suck eggs here. So, mate, because Westgold, you don't even have to worry about it. Like all you do is give CrossBoundary cash, and they give you a metric shit ton of power. Like that's easy. They build it, they own it, they operate it. You don't even have to worry about it. You don't have to employ people to go and manage it. It's just bloody easy.
Any
Relax.
size,
Get
any
your
sort of
eight-
mix of, different power sources and stuff.
Yeah, stationary
Bespoke.
storage, wind, solar, thermal base load,
Everything.
mate. You get your 8 hours sleep at night because you've got nothing to worry about. Easy as that. Cool. Timmy Taylor's numbers in the show notes. Give him a buzz. Great bloke as well. That's all we need to know. Bloody good stuff. Right, next up on the gold journey.
Alrighty, Pantoro. So as a refresher, they're a 750 million market cap gold producer now. Actually, I had a look last time when we spoke about them last quarterly. They were around 550, so it's a bit of a big change in the quarters. And they own the Norseman gold project. So production at Norseman this quarter increased to about 21,374 ounces at an all-in sustaining just shy of 2,400 an ounce Aussie. Cash and gold increase again this quarter of $8.5 million. So they finished the quarter with cash and gold of $112 million roughly.
Was that do you reckon that was a good cash build, Ali, versus expectations, or?
I don't know. I think, look, it was an improvement on the previous quarter, but whether it was as good as it could have been, especially with the gold price moving as much as it has, I'm not sure. Probably so, I'd say.
Good to see the likes of Pantoro on that. Like, at least we're getting cash builds.
Yeah, exactly. Yeah. So, I mean, the Scotia Underground progressed well, just shy of 1,100 metres developed. The OK Underground mine performed well, producing just shy of 10,000 ounces, which was, almost a 3,000 ounce increase from the previous quarter. Mining at the Scotia open pit completed ahead of schedule end of last month, and mining at Green Lantern completed early this month. And they're planning to commence open pit mining at Princess Royal in the March 25 quarter. The Norseman plant, this was quite a bit of a scary read. The Northern plant operating well above nameplate, sort of processing just shy of 300,000 tonnes per quarter, despite some interruptions, which they described as catastrophic crusher failures. And
I think that means it was completely fucked for a short period.
yeah, that's probably
I think that's the translation.
sounds about right.
Yeah.
And also a scheduled mill reline. So they believe those delays in aggregate sort of caused about a 1,000 ounce production offset. December 24 quarter, next quarter, they're expecting to be sort of in line with previous quarters, sort of around 20,000 ounce production profile plus minus 10%, and they're maintaining their FY25 guidance. And they're right in the thick of their big 85-kilometre drill program, which they announced a few months ago as well. And corporately, we saw recently they implemented those zero premium collars for 2025 production, where essentially they sort of, they still maintain full exposure to gold prices up to, $4,200 bucks per ounce Aussie, and sort of minimal downside if they sort of go over and above that. And they did some diesel hedges as well.
That's pretty smart, that one. I thought.
That was a smart one. I thought about 800,000 litres a month. Believe that's about 50% of their diesel usage, especially in light of all the sort of geopolitical conflicts going on in the world. That was probably a smart one there.
I think it's pretty common, like the diesel engine. I know Ramelius do it and all that. Yeah.
Yeah. And and they're still working on divesting Halls Creek and all the rest of it. I guess my takeaways, and this was actually a full quarterly, this report, another cash flow positive quarter. So it sort of feels like that turnaround is, continuing. The production rates at Norseman, also, continuing to improve quarter and quarter, could have been even more if they didn't have that sort of crusher failure and the mill reline. So their guidance is 100,000 ounces plus minus 10% for next year, for this current financial year, FY25. And all is sustaining guidance of Aussie $1,900 an ounce plus minus 10%. So they've only produced 21,000 odd ounces this quarter. So if you annualise that, they're pretty fair bit unders on the midpoint of guidance. So they've really got to sort of hustle in the next 3 quarters.
Well, even December quarter, you said 20,000 ounces.
Yeah.
So 60,000 should come from the second half of the year. Pretty.
Yeah, so they've got some
weighted at
work
the end.
to do. And similarly, with all the sustaining, they're saying it's going to be within 10% of $1,900 an ounce. I mean, this quarter was an improvement from the previous. They, brought it down almost $100 an ounce. But, I mean, they've got to keep doing that and probably more for the next 3 quarters. So there's, I guess what we were saying earlier today, everything's pointing in the right direction and trending in the right direction, but it's got to really keep at it and perhaps, keep improving at a faster rate in order to make this sort of guidance numbers that they've put out and reiterated. But
I might be able to add some colour on that there. I found myself doing a site visit to Norseman on the Wednesday of Diggers.
yes.
Believe it or not. So the back end of the year, you might get more production. I mean, they're doing the development of the underground at Scotia at the moment. So they're at the moment until they start mining at Royal, they're still putting through some stockpiles from the open pit at Scotia, and also the underground's going to come through as well. So you might get if you can get your underground throughput higher, then of course that's going to be
helpful. Yeah.
Helpful to meet the production ounces. But yeah, I feel after doing the site visit, I felt better about the strategy that they're going with now, being the underground at Scotia and sort of seizing the open pit mining at both Scotia and Greenland, which are part of that Scotia hub.
Pretty much an Ora-Banda copy, isn't it?
Yeah,
in a way, trying underground feed.
And yeah. I mean, it's a useful analogy. Both of them are kind of analogous in a lot of ways. Like you've got exploration upside, which is real, and you've got kind of transition to sort of underground mining to improve your cash flow dynamics of the company as well. What they talk about though is bringing the Bullen decline back online, and a lot of the drilling that they're doing at the moment is in this sort of it was like the main field area where Bullen kind of is.
Right.
That's the kind of exciting exploration stuff, which it's going to take time and money and all that sort of stuff to do. But to the extent you can have, like, you know, the interesting case from Norseman, it'd be something in amongst that area when they can kind of, you know, go redevelop the Bullen decline, go back in there, access the main field area. That's, you know, it's a while away and all that sort of stuff. But until then, hopefully their mine plan with Scotia and underground and everything like that can, and I feel better about that balance sheet as well now. So you got $112 million in cash and gold. That's a far better situation they've been in for, you know, for the duration. Hopefully that combination of the balance sheet, better mine plan, and exploration, sort of effective exploration, can sort of be enough to see Pantoro, you know, prosper. But
it's funny looking at, like, and you just think back to lithium time. Like, you imagine if, you know, who knows what the gold price is doing, but like these are like ridiculous levels at the moment, and like it could, like, who knows, it could keep going up, and these producers setting up mines could potentially make a lot of cash in the future.
Steady state at the moment, it's not particularly exciting for an $800 million market cap to add $8 million of cash in a quarter. You don't look at that and think it's about what it could be, but it's also understanding the risk if it doesn't sort of go to plan and all that sort of stuff as well. Yeah.
It's just been one of those other ones like Orabanda and Catalyst and things like that, where on the sort of high end of cost, but they've got, you know, every extra $100 an ounce the gold price goes up, that margin is, you know, relatively speaking, increasing a fair bit, and then just the share prices have been going nuts. Like, I mean, Pantoro's up over 100% just in the year to date, sort of similar to some of those peers I mentioned. So, it'd be one to watch, I think.
100,000 ounces at the gold price now, and the all-in sustaining costs you mentioned there, that's like $180+ million in operating, you know, sort of EBITDA type cash flow. Let's see if they can make something near that.
Yeah, but I think it's like, you look at, if gold was $3,000 an ounce, they would have lost money. Like, that's
works
gold
both ways, right?
3,800 or 3,700 for the quarter. Like, geez, better be adding free cash of some sort.
And that's why the share price has gone up 100%. It's talk. They're right at that inflection. All the gold miners that went through being sort of marginal to profitable just completely re-rated because the talk.
Yeah. Oh, mate, next up on bloody LGC's gold journey. We're heading over to God's country in New South Wales.
I thought I'd actually take one off Ali's plate.
She's like the tour guide.
Yeah.
You're the guest speaker for this one, JD.
All right. So Alkane, 280 mil market cap miner / developer. So mining Tommingly with the Boda Kaiser big development project, which we won't go into too much detail today. This one was a full quarterly that they came out with, produced just over 18,000 ounces at just under 2,200 all-in sustaining cost. So that meant they produced 19 million operating cash flow from Tommingly. Cash went backwards though because of the investments. They're putting a lot of money into Tommingly at the moment. So tracking to meet guidance, the midpoint is 75,000 ounces at 2,500. That all-in sustaining cost is a bit higher than it otherwise would have been because they include the decline development, which is kind of the right thing to do, but that's in the sustaining capital. So they obviously came in a good bit below that all-in sustaining cost guidance this quarter, but I'd expect the next sort of three quarters to be at the kind of higher end there.
And remember, they're owner operated as well. So a lot of their instead of having a contractor, a lot of that's capitalised. So like they should have a lower all-in sustaining cost. So if it is higher, it's probably just something to consider.
Yeah, we'll touch on that. So we'll get into the cash now. So they closed with 52 million. That's cash, bullion, and listed investments. They've got another $15 million in undrawn debt that they can tap into if they want, but they do have about 65 million in drawn debt at the moment. So that was like another 17 million was drawn this quarter. 20 million of that is equipment financing, kind of like you're saying, Maddie, they're buying equipment themselves. And then 45 million of that is project finance. So All up, they're sitting at a net debt position of around about $12 million. That leaves them with an EV of just under 300 million. Now look at this waterfall chart. I thought it was actually a pretty good effort. They've got side notes and details tapping into, what exactly the growth and expansion capital is for, what the mobile equipment is. I think it's pretty comprehensive and gives you a good idea of what's going on. And just worth noting, if you're watching it on YouTube, that opening cash and closing cash is cash. That doesn't include bullion or the investments held. So they're coming to a period where they've done a fair bit of investment, and they kind of characterize it as coming to the end of that, although there is good potential that calendar year 25 could see another big round of investment. But by December, they should be commissioning the upgraded plant. They've chucked in a new paste plant as well as a flotation and regrind circuit as they're going underground there. Matty, I know you're a big fan of the paste plants. They're lifting throughput to 1.5 million, although they've spoken about getting out to 1.75 million tonne per annum, which should help see the recoveries go up quite a bit. So looking at FY24, just gone, recovery is sat about 78%. This quarter already, we're talking about 85%. It's a pretty decent improvement in recoveries, although that's going to come on the back of a decent amount of investment. You can see a good bit of detail on hedging as well. It's kind of interesting. I like how they've broken it out each quarter. They're showing how many ounces and the price. And they've also got a few put options just to lock in over 3,000 Aussie dollars an ounce. But essentially, for each of the next quarters, about a third of their production will be hedged, so 6,000-ish ounces. And that actually goes all the way out to mid-2027 at around about 2,800 Aussie. So a good bit below where we are, which means, in a quarter like what we've seen today, they're realising around about 3,500 Aussie dollars for their 18,000 ounces produced.
So what does that mean they make, JD?
So I think if you look forward to the next few quarters, assuming 18,000 ounces in line with their guidance numbers, assuming at the high end of the all-in sustaining cost guidance that they've provided, and also assuming that the gold price stays flat where it is today, they could be earning a 900 Aussie dollar margin on their 18,000 ounces, which would mean 16 million-ish in operating cash flow per quarter, obviously not taking into account the other investments that they've kind of got to make.
You never really see the cash build that way, do you?
You never do.
So it's not as easy as just going, gold price minus all the sustaining cost.
I wish it were. So it's worth.
I still try it every now and then.
It's hopeful.
So it's worth tapping into the kind of 5-year plan that they've put out, because there's a fair bit going on here. They've got a pretty big job. They need to move the highway, which is a $90 million job.
Oof.
And
Nice.
they've got a couple years of purely underground operations before FY27 through to 29 should see some open pit come online. Like, they haven't made final investment decision on this. This is going to come early next year. But they do have this $130 million capital program, which would be spent through 25 and 26, which, that is that big round of CapEx, which they could enter into that I referred to earlier. So that, if you look at the FY26 numbers, what they kind of could be earning, they're talking about producing more ounces, all-in sustaining costs coming down again. They could be looking at an EBITDA margin of 130 million. That kind of nets off perfectly with the capex that they might need to spend to kind of reach it. So they really want to be one of those companies that has 100,000 ounces in production, like they've planned out here, at around about all-in sustaining cost of 2,000. They want to be, where a kind of catalyst has gone from in the past few years to where they see themselves today. That's what these guys, Alkane, want to be in a couple of years' time. But there's a fair few moving parts. Like I said, I neglected Boda Kaiser, which is a big kind of growth project potential that's had a scoping study come out in July. It needs a lot more work to be done, so we can go into that another time. But the short of it is MPV7 was about a $1.8 billion sum, 24% IRR and 17-year mine life. So there's kind of potential there, but I don't think the market is ascribing too much value to that one at the moment. And ultimately, if you come in, you flick through the sort of prezzo, the one thing that might stand out at you is that they probably don't have the cash right now for that capex should they press go on that FID early next year.
It looks like a JV jobby, that one.
Boda does, yeah, you're right. They've already got 65 million in debt. There's potential they raise a bit more debt to move the highway and all that sort of stuff. But I wouldn't be surprised if we see a capital raise that would de-risk the growth a bit. It doesn't have to be hugely dilutionary. And when you open the presentation and you see 6 brokers already covering a $250, $300 million company, I think I'm not the only one kind of smelling maybe a capital raise in the next year or so, which probably would be the sensible thing.
Could they sell down a stake of Boda if they wanted to as well, you know?
They potentially could. I mean,
Yeah.
we've spoken at length over the past year about how copper gets more and more interest. It's something that's going to take a lot more investment, a lot more understanding, a lot of drilling and these sorts of things. So maybe divesting a portion of it, getting an experienced JV partner in there rather than just a junior to develop that huge project is the way to go. I mean, it's probably the sensible way to go for a project of that sort of scale. That kind of takes a bit of time.
Maybe Regis might be interested.
I think they might have
down on.
might have had enough with NSW, mate.
Sorry. Ooh, just get myself back. It's one of those the New South Wales miners, they get forgotten about it. Like sometimes, like, because we're always so WA focused, like these New South Wales standalone operations would sort of get, I don't know. I suppose 6 brokers are covering them. They haven't forgotten about them. MMTS haven't forgotten about people in New South Wales.
No, they haven't.
That's probably something we need to get better as WA founded podcasts. Like, we need to be like MMTS as a WA founded, like, mining title compliance company that is Australia wide.
Truly Aussie-wide.
That is the attitude to have. Eva, Helen and Shannon. So they're probably going to teach us a few things.
Well, you look at some of the questionable kind of permitting stuff that goes on in New South Wales and you scratch your head. But, mate, if anyone can make sure you're compliant with your mining title, it's Eva, Helen and Shannon at MMTS.
And Trav, do you think it's something to do with their cutting edge land monitoring systems that they've patented themselves?
Mate, this actually rings a bell.
Yeah,
I think it is.
And the fact that they use water-cooled quantum computers to run it, like, that's she's high-level tech. Like, you give them a ring, they'll even show you. That is a thing. Like, this is like next level bloody computing power because they're the only ones that can do it in Australia. So they're the only people you ring.
Just another one of those ones that just makes you sleep well at night, hey?
That was part of our DD process. Once I heard that, I'm like, user in forever.
Imagine trying to be compliant without that.
You can't be.
No.
They wouldn't be using it, like using quantum computers if it could work another way. So give them a ring. They'll bloody the gurus of mining title compliance. Aluminium. This is like, this is your uranium.
No,
what happened on
tin?
Yeah. You were early to the party. Yeah.
No, I was late. Yeah.
What's happening? As you said, we've got a bit of aluminium spectacular coming out at the end of the week, but this is some updated info that got dropped after you've recorded that effectively.
100%. Yeah. Basically, on Friday night, there's a bit of a bombshell that emerged in the bauxite world, Matty, because I know you follow it closely, but
I am now.
It appears some exports of bauxite from GAC have been suspended. GAC is the Guinea Alumina Corporation, which is a subsidiary of Emirates Global Aluminium, which, as you might expect, has its roots in Abu Dhabi and the UAE, Emirates. Yeah. The exact issue that has arisen here is that GAC has faced some issues trying to export bauxite from Guinea, which apparently have been held up by customs. Check this comment here. We are seeking clarity from customs on the reason for this action and are working to resolve this as quickly as possible. Which was a quote coming out of EGA, which is the parent co here. For reference, GAC accounts for 12 million tons per annum in the global bauxite market from a mining perspective, where only 400 million tons were mined in 2023. So that's about 3% of global mined bauxite supply. Bauxite is, of course, refined into alumina, which is then smelted to create aluminium. And on the back of this news on Friday, alumina sort of futures just shot up. They're now US $640 per ton or thereabouts. And if you zoom out on the alumina chart, you'll see the bigger picture here. Market's been tightening. The price has responded. And while this announcement is only in relation to what is potentially just 3% of global supply, the implications might be a lot more broad than that, because there's a lot more than 12 million tonnes per annum of bauxite mined in Guinea. More than 110 million tonnes were mined out in Guinea last year.
Far out.
China is currently addicted to Guinea's bauxite. They take about 100 million tonnes themselves and refine it and smelt it domestically in China. The political environment in Guinea is pretty interesting itself. It leaves a lot of fragility in the market as you think about what how the government might evolve, and there's some policy kind of direction that wants more value add in country as well. So there's a bunch of objectives to be weighed up there, and when you put all of that into perspective, you try and think, well, who are the beneficiaries of the market dynamic happening at the moment? Well, there aren't many small caps, that's for sure. But just look at South 32, they're up 17% in the last month. Alkane was up 24% in the last month. Metro Mining's up 18% in the last month. So even though there aren't like a million equities to choose from, the share price of the miners that have, exposure to bauxite, alumina and aluminium markets are definitely responding.
What's Alkane's market cap?
Enormous.
Yeah, it's fucking huge.
15 billion, I think.
Jesus. 24%. That's unbelievable.
Yeah.
Wow.
Yeah. All that to say, we're pretty pumped to bring the Money Miners a very timely interview with the expert in the sector. So stay tuned for, I think, Friday this week. We'll look to drop our interview with Aluminium Alan. It was a ripper. I still think about it. I'm still thinking about it.
Sounds interesting, Trey.
Very pumped to share that one. It was one of the best chats we have probably ever done on this show. It was fascinating, and it's super, super relevant. This is right now backdoor here in Perth, in WA. It's super relevant, and it's been a bit of a sleeper, and it's one of those ones that could sort of explode into the political attention as well as the investment attention as we sort of, work our way through 24 and into 25, because of things like what you just mentioned there, the amount that comes from just one country, all these sorts of factors have it in a bit of a fragile moment. So very excited to share that.
Yeah, pumped for that one. Good stuff, boys. Good hustle on the recruiting as always there, because where else would he go for a podcast, to be honest?
It's a slow burn, isn't it?
It's like aluminium, JD.
It is.
Bit of a
Looking
slow
at that
burn.
graph you showed me.
Oh.
It's bloody... Opposite to a slow burn is MMS. That's a fast burn. That's a fast. They'll burn through a frickin' open pit quicker than you can say mineral mining services. Holy snap and duck shit. Bloody... who else we got? I'll rip him.
No, you go.
Paul the Sicilian got it grounded. God love him. CrossBoundary Energy. Give Timmy Taylor a call. The Sandvik Ground Support Division. CRE Insurance. Greenlands Equipment. K-Drill. MMTS. Australian Earthworks and Haulage. And go check Spark out if you're an active ASX trader.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.